Hey everybody, hope you had a great trading day. We're going to get into some brass tacks here, talk about what happened in the market. We have 6 names to go over for earnings. We really need to talk about what happened today, why GDP moved the market the way that it did, what to expect with PCE tomorrow. So let's just jump right into it. There's a lot to get into and I want to keep it short and informative. As always, subscribe to the channel, click all notifications if news and key levels is something that interests you. So here we are with the Nasdaq futures. And here we are boxed in perfectly. Now, when we did the pre-live this morning, and every morning, if you don't follow along, you should, we do a pre-market live show. Now, if you take a look at this 12.3, we've been battling along there. And then out of nowhere, we just shoot right up, straight up. And as I like to say, straight up is not a pattern, okay? And you can see how we just ran right to resistance and then stopped. So let's zoom out on this for a second so you can get what I'm about to put down, okay? There is no reason to stop there except that that is resistance, period. And you stop dead. Now, what does this mean? Well, it means a couple things. It means that this is resistance. That's all it actually means. Now, are we going to stop there? Well, here's the most healthy thing that could happen. And we should talk about smart money, dumb money, and the positioning there as well. Probably be a good idea right now. So if you take a look at what happened, okay, in this last hour, right? 4 o'clock, you shot up on the Amazon news, which we're going to address in a moment. And you look at how this played out. Now let's just get rid of the moving average for a second and just look at the actual price and what happened here, okay? All we did was come in today, have a really good GDP reading, which was excellent for the market, which we're about to address, and then just rip because everybody was trapped because of Meta and also following up on Microsoft after they thought Microsoft wasn't going to be good. Okay, the entire breadth of the market today was absolutely awful, and at the same time, we're going straight up. It is a classic short squeeze. One of the most telling signs of a short squeeze or that this is probably not sustainable. See how your volume is less than the previous day? So you didn't even carry over the selling from the previous day. If you can't even carry that over, what's the point? Your volume needs to be well above that previous sell, and it's not anywhere near that. Or you need consecutive days of it. Now, you could argue, well, we're not going to get that because PCE's tomorrow, and that very well could be the case, and that's something that we're going to address shortly here. But if you take a look at this, you're completely and utterly boxed in. Zoom out here on the hourly, and the only thing that happened today was a lot of people got trapped, and you're going to have a lot of people here really second-guessing themselves and going, oh, I should be going long. Well, we know how this goes if you can't get through this level. And that's something we really have to take into account. Now, if you take a look at the ES and you take S&P futures and just look at April, okay? You've been in the same range, 4,100 to 4,180. All you did was come up here. Straight up is not a pattern, all right? I can't stress this enough. I went over yesterday's video, and I'm going to link yesterday's video at the end of these. I'm trying to make these not fluff and tell you exactly what's going on, okay? We have no leadership in the market. We have 4 stocks that lifted the entire market today. Okay, that's all it was. And unless you were willing to pay up on stocks that are grossly overextended, you didn't really have that great of a day. Now, can we see this build into something? And the answer is absolutely yes, you can. That GDP number that came out today is pretty clear that they are done raising rates. Okay, they are grossly off where they thought they were. We were looking for 2%. And we came in at 1.1%. That is substantially less than they anticipated. If we take a look at investing.com, free site, I would recommend you use this over MarketWatch. It's more accurate and they give more details. And it's free. So jobless claims, a little stronger than anticipated. GDP sales, nobody cares. Price index, nobody really cares. Quarter over quarter, okay? 2%, you came in at 1.1. Well, that is a level that you need to pay attention to. That means their estimates on how the economy is doing are off by about 50%. That's not a small amount, and that equates to earnings and it equates to growth. So the question is, you can see how we ran up today, but there was something really weird that happened. The bond market went up. In other words, yields today actually went from 344 to 353. Well, if GDP is weaker, why are we seeing this? And we saw it not in one spot. We saw it everywhere. Take a look at the 2-year, and you can see it here as well. And this is really kind of odd. Now, you're seeing them sell treasuries, okay? And that doesn't really make a lot of sense if we're done with rates, which is what GDP is supposedly stimulating. And then you come here and go, okay, but high yield is trying to move higher. So they're buying high yield bonds, but they're selling treasuries. It just doesn't make a lot of sense if you think about it. So there's a lot of imbalances, and then you start going through exactly what transpired today. And all we really did was have a massive sell-off and then run right back to what? The resistance level of the leading sector. And besides that, if we take a look at the MACD here, and let me just show you this so you can see the MACD. Okay, it's going to take a lot more than just this to miraculously stop this. Now, if PCE tomorrow is good, this is what we're looking for tomorrow. Core PCE price index, month over month, 0.3. PCE price index year over year, 4.5. And you can just, let's go down a little bit here and you see the others. But the main ones that you're really going to want to watch is this core month over month, 0.3. That's really going to be the one that they're going to pay attention to. Take a look at sectors, look at the SOXX. Nothing's changed here. Nothing. And you can see pretty clearly what's happening right in here. We're still down. It's one day. We hardly moved. Matter of fact, my biggest trade today, my biggest profit, probably my biggest profit all week, was short NVDA. And it was a really simple trade. And it's exactly the levels we went over today. And we went through this. 272 has been resistance. And it's very clear that that 272 level has been resistance. So all we did, you see how far back it goes? I'm not going to go back even further with it, but you get it. Now, the reason I'm showing you this is if you start to learn how to draw these properly, it's a game changer. Okay? It'll make your life so much easier, and it's such an easy way to trade. And all you have to do is just get good at it, learn your stops, your position size, and how you're going to scale out of your positions. Usually things like this I'll do in halves. This got very profitable, so we actually scaled out 3 times. But all you're doing is watching this set up. And then the moment it sets up, you're just waiting for the pattern. Now your pattern is you have your first bar, you break out, right? So now you have an inside bar right there. That cracks right there. I don't even need the low of the day. Okay, now my risk is here. So all you do is quantify your risk. It comes out to $1.50. I shorted stock and I bought the 270s. And we watched how it acted right here. And we let it tell us what it was going to do. And then all you did was come down to the gap fill. Come down to the gap fill, tries to rally, fails the rally, and you can see that right here, 1, 2, 3, up and down. This is a 3-bar pattern. I should probably do a whole video on this particular pattern. This is one of the, if you ever read Bulkowski's books on candlesticks, this pattern right here, if you just want to screenshot this, and every time you say it, right, I'll just walk you through this. This is actually worth your time. You're going to want to rewind this. So what you do is you come down here, 1, 2, 3. The moment you crack here, this is one of the highest probability patterns of working. Okay? Works the same exact way if you flip it and you were looking for a bullish to run up. Okay? This is one of the highest degree probabilities of a pattern actually working. Not the most profitable, but the highest degree that you're going to be right. Anyway, you can see how you're sitting right in here. You broke down, and then we just knew where the other level was. And we just watched our levels. We kept breaking down. And then what we did was just zoom out of this. And the reason I'm doing this is because of your comments. And when you guys comment, and then all we were doing is just looking for the hourly, and we're just looking for those spots. You see the blow right here and how that was becoming an issue. And let me just close the rest of it. But we did exceptionally well. I could do a video on that entire trade. We did that live. I should probably take the live footage and do a video. If that sounds like something you guys want to see, I'll put it together and I'll get it out to you by Sunday. Comment below if you want to see that. I will show my position size and everything with it. You know, I just have an issue. I think it just looks a little cheesy when people are showing, look at me and look what I made. That's not really the purpose of me doing this. The purpose of me doing this is to educate, and you know, I hope it's helpful. Anyway, so that was my best trade. My best trade was not chasing Amazon up, okay, which is falling directly out of bed. You know, and this is a really nice segue, okay. This is something that we should really be paying attention to, okay. This is telling you that things are changing. Okay, this is not the Meta move. This is not the Microsoft move. Okay, this is the Amazon move, which is telling you, no, we're not going higher. All right, now, decent quarter, good earnings. Okay, so tomorrow, your goal is to watch that 1330. We're going to run through a couple other names here just so you can see what happened tonight. Okay, net 61 to 44. This is not lighting the world on fire. Now, tomorrow, you're going to watch PCE. We'll be doing a live stream for PCE where we trade tomorrow during the live stream as well, should the opportunity present itself. But the purpose of me telling you this is, number one, PCE. You get a good PCE number, all we're talking about from now on is just earnings, which is awesome because then it becomes a stock picker's market. Awesome is the technical term. So if you see this level right in here, they missed revenues. A couple guys in the room were asking me in the Alpha Chasers community, hey, it's only 600,000. You can't have a price to sales ratio like this and miss revenue. Okay, you can't. It's just not allowed. Okay, it means that, you know, it means you're gonna have a problem. Okay, so that's a real issue, and they know that. So when it happens, they did everything they could to get it to only 600. Pins is something I own long term. The comps weren't really good, and the future guidance wasn't the best. Overall, it was a decent report. It is what it is. You know, they were looking for it to beat by coming flat. They made 8 cents, and revenues were up. This is an extremely long-term hold for me, just FYI. I started buying this at 18, 19 when we had a position out there. Elliott Management bought 9% of the company, and I usually will ride with them on their ideas for however long they're in there. And I've done quite well doing that over a period of time. There's nothing technically redeeming about this chart, and there's nothing fundamentally redeeming about that research that came out tonight or that earnings report that came out tonight. I'm just simply stating that I'm in here because of who took a very large position. CROX was a huge disappointment today for those that saw this. You know, it was acting so great too. And this is why you just don't play earnings, right? You never, ever own ahead of earnings. And this is exactly what transpires. This is exactly what happens. You know, you just don't play it. You always need that cushion so that if this does happen, you're okay. And this was really bad. It was really bad guidance. You know, it just was. Caterpillar kind of came in, bouncing around. It is what it is. It's a failed H. I wouldn't go near it. MA, same thing. You're just bouncing around. Not much really to review there, but let's review it. So you came in and you're right in line to beating by 3%. You know, Amazon's really the one that people are going to watch, and people are going to be flabbergasted because it's supposed to do what Meta and Microsoft did, and what they're not getting, what they're not understanding is the Microsoft move, while powerful, is moving on two things. One, everyone wants exposure to the new AI, right? That's why it's moving the way that it is. Number two, that's a good old-fashioned short squeeze. I mean, there's just really no other way to say it. It's a beautiful breakout. Okay, it's textbook breaking above the doji and going. Absolutely textbook trade. Congratulations if you did it. And if you did it and you're in there, you might get another 10 points out of it. It's very possible. But you have a huge gap here, and one stock is not going to go up while the rest go down. Okay. Snap is an absolute dumpster fire. Guidance was awful. They missed on the revenue side. You cannot miss on the revenue side. You know, it's interesting because then you look at what happened tonight and the best performing stock. And if someone told me it was going to be this way, let's put this on extended hours, it's actually Intel, which is staggering. And they beat on the revenue side, and their loss, they were supposed to lose 16 cents and they lost 4. So that's absolutely huge. Absolutely huge. and they should take pride in that. And I'm going to be looking at going long this tomorrow. So this is exactly the kind of trade that I like, where they come in like this, and then you have this reversal at the bottom, and then you have the gap up, and then people don't know what it is. They sell it down, provides opportunity, you get involved. You could go long this with this as your stop. You could be in this for $2 of risk, long term. I mean, think about it. If you had a good research report, I'll walk you through the idea. So here's the idea right here, right? Let's say you flip tomorrow, right? And you're up here at 31.60, and you're fortunate enough to come back and gap fill to 30, right? You're now in here at 30 bucks with this pattern down here and those earnings. Maybe it's worth a shot. Maybe it just goes sideways for a while, right? There's nothing wrong with that. If that just went sideways for a while, nothing wrong with it at all. First Solar, this shouldn't be a shock to anyone, down 13 after ENPH in that absolute debacle. They missed on the revenue side. They missed on the earnings side as well. This is just not what you want to see. Again, we have PCE tomorrow. And tonight's video, I just want to be really clear about this, same thing as we did last night. I'm not doing as much fanfare with the memes. I'm just getting into the details. I've been trading for a long time today, and I'm doing these just because I think it's really important to focus on some of the key metrics. And we should go through, before we wrap this up, let's go through smart money, dumb money. So here we are, smart money, dumb money. You're starting to see what? Them sell. Dumb money, right? We're starting to see who? Institutions buy. Usually when institutions start buying, the market starts coming down. We talked about this phenomenon for some time, and we talked about the spread yesterday, but you are starting to see them buy. They've got to that level of pessimism, and they are starting to buy, and they're starting to buy from retail as retail is getting out of the way. Now, whether or not that continues, let's zoom in on this, remains to be seen. But I think it's important to note, because when we saw this happen last time here, we can see that right here, and how we were here, right? That marked the top, okay? And that's very different than when they're inverted to when we're fully invested down here for smart money and completely underinvested, right? And that usually is marking a bottom, okay? See how the differentiation between when smart money's peaked, okay, and dumb money is underinvested so far this year. Dumb money's been making out better, right? They're lightening up as things are going on. They're adding as things are going on, making more and more money. They're making less and less money on their positions. So you have a position here that is telling you that you're near a top. Now, it's very possible, looking at this, that we go sideways for a couple days and then finally break out of this. That is a possibility. And you should not rule that out. I certainly am not ruling out that we could continue to push, but we need leadership. And right now, Microsoft by itself is not leadership. It's possible you get some kind of move out of Apple next week, and I'm going to cover this Saturday in great detail on what's going on with Apple. And I do think Apple can absolutely crush. I have a theory on it. I'll go through it this week, but on Saturday. But you look at that and go, well, this could absolutely break out. Absolutely, this could break out. I mean, higher low, right? Higher low, higher high, right against this level. You break out and you start heading to here. It's going to lift the whole market. It's going to take semiconductors with it. This can move the market. Have a good night, everybody.